Stocks taking a dive on one of the worst weeks that we've had in over a year. Joining me is Jonathan Corpina to weigh in on the action. Thanks for taking the time, sir, to come here on the floor and talk about the red action that we're seeing. I know you have been hyper-focused on European stock markets. What clues have they been giving us as we see this thing affect Italy?
You know, a little bit of a disconnect overnight, right? I would have thought that the European markets would have gotten hit harder coming into our trading session and after the activity that we saw yesterday. So not much of an insight there. And then coming in today, our futures were up. And very quickly, once the market opened, it lost steam here. There have been no positive headlines that could have helped this market move higher. And if anything, we continue to get negative headlines, all circling around the coronavirus. And we continue to see this pressure today.
Why would that happen? Why would futures be up 100 points and then we sell off quickly as it opens?
So if you look at the activity from yesterday, we opened low and closed low, right? So the market, even though had a little bit of volatility intraday, it was pretty much a straight line across the board. And when you're down as much as 3.5%, a 0.25% move in the market is not that big of a deal. So we closed on the lows yesterday. It felt like there was some sort of support that was coming into the market overnight, hoping that we were going to get a dead cat bounce. We did very, very briefly, and then as the continued headlines came out about new cases in new countries, the market pretty much pulled the plug out from underneath it.
Yeah, sure did. So don't get fooled by those futures. Sometimes they can be tricky. We do have this major gap lower in most of the indices, S&P, the Dow. Now, usually gaps get filled. I don't know how long that will take, but should it happen sooner rather than later, what do you recommend traders to do?
Yeah, I think there's nothing to do at this point right now. Like we're really gonna have to wait and see how this whole thing flushes out. I think everyone was hoping yesterday was a flush out, but like I said, when we traded at a straight line pretty much for most of the day, that wasn't the flush out. And we were thinking, if the futures were up 25, 30 handles today, that would have been a good indication that maybe things did flush out. But at this point right now, we're going to continue to see pressure on this market. We need governments across the world to start speaking up and disclosing what's going on, what's happening, and get a little bit more transparency here. I think the lack of transparency and the numbers, the difference in numbers that we continue to hear about is adding fear to this market. So what do traders do at this point? There's not really a point to step up right now. If you're a long-term investor and you liked Apple at 320, you're going to like it below 300. So watch certain psychological levels or technical levels that clearly they're going to break through. And once you see it start to turn, maybe you get back in a little bit. But be aware, the more these headlines continue, we can continue to see legs lower.
So for some of our viewers who aren't day traders, they are invested in their IRAs or 401ks, and they don't have a lot of control on their portfolios. What should they be doing?
Yeah, I would go to your computer and look at a chart of the Dow or S&P from 1985, and you'll see that this blip is going to be a very, very small blip on a chart, right? So there's nothing to panic about. I mean, we've had a lot of negative headlines in 2019, and our market continued to move higher and higher. It was resilient enough. The fundamentals, our economies are strong enough. This was an unknown headline, an unknown ongoing headline that we still have no idea where this is really going to lead, and the ripple effects that we continue to see. So once we start to get some information or some transparency on that, we'll feel much better about the situation. But for a long-term investor, I think this is just another one of these 2 steps forward, 1 step back.
Okay, so once you zoom out, it's not as bad as it looks.
It is. It's not as bad. And over time, we've had many of these pullbacks. I mean, to keep things into perspective, markets were up, 23% last year, overall. So we had a 3% pullback to get us relatively flat on the year as of yesterday. We're having another pullback here again today. So in the overall scheme of things, when you just compound it between last year and this year, it doesn't really hurt that much. I think it's the uncertainty that hurts.